So the stock market is driven by human emotion of fear and greed, two primary emotions that drive the market. So for majority of the people, you ask yourself the question, am I a short-term trader doing this for a living? If so, yeah, you learn how to read volatility, learn how to ride the volatility.
Hey, everybody. Welcome back to another episode of the Richer Geek Podcast. Today we have Anmol Singh. Anmol is he's in the finance area, but we're going to talk about a little bit difference about trading stocks. We're going to talk about some of the mistakes that everyone makes, including myself. He's fueled by an unyielding spirit. He's embarked on a quest for greatness. He graduated high school seeking knowledge and adventure at the prestigious Brell University in London, and the audacity of his youth propelled him forward to amass a fortune at the tender age of 22. Congratulations. He's been a business leader. He's been on Forbes, International Business Times, and now he's the guiding light in the murky depths of the trading world, leading a formidable team of experts at Live Traders. We will talk about that and his book. How you doing, Anmol?
I'm doing great. How are you?
Good. So get us started. Your kind of your background. How did you make the money at that tender young age, and what got you to where you are today?
Yeah, definitely. So, I mean, I got into the stock market when I was 18 years old. I was in my dorm room, and I think at some point, every guy is curious about the stock market. They always wonder, like, why is it moving? Who decides where it goes? Like I was really curious about that. So I spent a lot of time, in my dorm room, just studying, reading a lot of books, taking a lot of online programs and courses, and like really diving into it deep. And then in college, I started a club called the Trading and Investing Society, which now, after many years of graduating, is still a running, thriving society. So we started that. Bunch of guys who just meet up once a week and talk about the stock market, what we learned, share ideas, and that's kind of where the spark started for me in the stock market. And I was like really got into it. Started writing articles for Yahoo Finance and different websites when I was like 18, 19 years old, getting paid for those research articles. And that's primarily why I tell people don't trust what you read online. It's probably written by a college student like me, at that point. So I collected a lot of money, saved up some money there. Then I started trading, lost pretty much most of my money very quickly. Then the little bit I had left, I joined a prop firm, which is basically a company which hires traders, gives them the company's money, and in exchange they take a percentage off everything you make. So I started trading for the company, traded for them for many years, kind of worked my way up in the firm, got up to, a pretty high level there where I was trading millions of dollars for their money in exchange for 30%. So that's where I got my start in the stock market. And then did that for about 5 years from 2010 to 2015, worked with the company. And then when they got bought out by a different firm in 2015, that's when I decided to start my own live traders, because I was like, I don't need to give them a percentage anymore. I might as well just start my own thing now that I've got my own capital.
Yeah. So there's a lot of questions that we have. It seems like when you read the articles, things like that, somebody sneezes in the world, bam, there goes the stocks, and it seems pretty volatile. What can you tell our listeners, just like, why is it all of a sudden crash? It seems like it wasn't even that big of a deal. Someone just said something and wham, it goes down. It seems pretty volatile. What can you say about that and kind of reassure people that, there is a place for the stock market and you should diversify into the stock market still?
Yeah, I think just like anything else in life, it has its ebbs and flows, right? Nothing goes up in a straight line, nothing goes down in a straight line. Everything will have it ebb and flow, and that's volatility in the stock market. Just like your heartbeat's not going to be flat, otherwise you're dead. It's going to be ups and downs. So stocks are the same way. They're going to move up and down, just how they are, because some people take profits, some people buy more, some people get fearful, they start selling. Then the others look at it as buying opportunity. So even though it dropped, it came right back up. So the stock market is driven by human emotion of fear and greed, two primary emotions that drive the market. So for majority of the people, you ask yourself the question, am I a short-term trader doing this for a living? If so, yeah, you learn how to read volatility, learn how to ride the volatility. But if you're somebody who's like, I'm investing in the stock market, I'm not a trader, I have another job, I have another business, but I want to invest on the side. Well, if you're investing on the side, then you have no business looking at the day-to-day gyrations. If it's a long-term investment and you intend on holding it for 5, 10 years, then you really don't have any business looking at the stock prices every single day and just driving yourself crazy. So save yourself the trouble. If you are an investor, you got another job, got another business, just invest in the stock market. And historically, I mean, we've seen how much the stock market dropped in 2022 and then we came right back up. So every single time the stock market is higher than where it was 10 years ago, every single time, no matter how many crashes we got and stock market still at the highest. So that's what you have to realize as an investor is the markets are created in a way that they will consistently go up. They might always have its ups and downs along the way, crashes along the way, but it's still an upward sloping trend. So I think you just have to learn how to ride that as an investor and not be that person selling on that volatility because you just got freaked out and then you miss out when it comes right back up again.
Yeah, that's a good point. I actually know somebody that said, "Oh my God, it's going down," and they sold everything. And I'm like, going, "You just lost all of your money because you panicked." And it's hard. You see your wealth going down. I also know someone that said, "Yeah, I was a millionaire once, and I just wrote it down into the ground." With some of the tech stocks. Back in I think it was in the '90s or something like that. They were that tech millionaire and wrote it down. Um,
Mm.
Waiting for it to come back up. What are some of the biggest mistakes as far as investing and trading that you think that people make, and how can they avoid some of those? So let's say, I'm a young guy that's making good money. I want to get into it. What's some of the advice you can give people?
Yeah, number one, like have a plan. Like just like you wouldn't enter a new business without a business plan, don't get into trading or investing without an investing plan. Right? So you need to know what you're going to do before you do it. Because when we are in the middle of a trade, now our emotion brain is taken over. We're thinking emotionally because we're looking at our account going up and down. We're not making logical decisions. That's why the logical plan has to be created before you get into the stock or before you get into investing and knowing what's my expectation, right? And then having maybe levels. Okay, if the stock goes up to here, I'm going to take my profit. Or if it goes down to here, I'm going to cut my losses and walk away. Like you need to have a plan. And that's kind of what we teach people is like you need to have what's your entry going to be, when you're going to get out if you're right, and when you're going to get out if you're wrong. Because the money is made on the way out. You have to sell investments unless you're holding like S&P 500 or NASDAQ. Yeah, sure, you could let it ride forever. And that's a great investment. But when it comes to stocks, you have to take advantage of when stocks get ahead of themselves, right? I mean, we saw so many stocks like Zoom, Roku, a lot of these that were at like $500,000 a share, and now they're back down all the way to double digits, some even single digits. And majority of them are never going to come all the way back up again. So with the market, the stock market as a whole is what you can hold on forever without looking at it. But when it comes to stocks, you need to take advantage of those spikes. So have a plan on when you're going to get out, when you're right, when you're going to get out, when you're wrong. Don't trade emotionally. That's the biggest mistake people make is emotions. And emotions only creep in when you have no plan. So you're just looking at the stocks emotionally, right? And then the other part is don't get caught up in the hype. Just because you read something online or somebody said something on Reddit or Twitter and you're like, this is going to be the stock. I found something that hedge funds with millions of analysts, millions of salaries, they didn't know. They didn't find it. I found it by reading something online. I mean, you're not that smart. So, don't make that mistake. Right? Nobody knows anything in the stock market. We're all trying to make educated decisions based on our plan. So have a plan. Don't trade emotionally. And then, have exit points in mind so that the stock is going down. You're not just holding it all the way till zero. Learn to get out because there's also opportunity cost that people don't realize. That money could have been used at a different investment. So if it's going down, cut your small loss there, move into a different stock that is going to be a good one. And that's opportunity costs because the people always ignore, well, yeah, but if I just keep holding that stock eventually came back. I'm like, yeah, but it took 3, 4, 5 years to come back. That money could have produced so much more if that was parked somewhere else. So people need to realize, a lot of those different factors.
Yeah, and it is tough, especially when you're in your maybe 30s, 40s. I mean, you have a long period of time. It's not like you're getting ready to retire in 4 or 5 years. And I think it's funny. I go into my bank. There's a 22-year-old kid that says, "Hey, you should invest in fund 2034, 2043, or whatever it is." And I'm like, that's not me. So what could you tell people that should they invest in funds? Should, what portion of the portfolio, and then individual stocks? How did they make that determination? Because it seems safer. I'll just throw it all in a mutual fund or some type of fund. It's safer. Or should I ride some of these tech stocks that are up and coming?
Yeah, so I would say that everybody needs to have a diversification sort of allocation. Meaning, let's say if you have example $100, right? So I would say 80 of those dollars should go into something like the S&P 500 using ETFs like SP5, SPY, QQQ, right? Like Nasdaq. Just put your money there. 80% of that should all, in my opinion, be in the stock market. And then sure, you could say, all right, I'm going to use 10% or even a smaller percentage and then 10, maybe 5%. And that I'm going to speculate with. I believe this company is going to be the next big thing. Great. Put a little bit, put 2% in it, put 1% in it, right? Put some of your money in it so you're still involved. So you feel like you're doing something, you're listening to your intuition, and you can still feed that little bug that we all have of finding a next big thing. But you never want to have all of your assets in there, right? I mean, learn from a lot of different people. Like just a few years ago, we had the whole Wall Street bets thing with GME, AMC. Everybody's like, hold the line, diamond hands, keep buying more. And look what happened. They're all the way back down. You didn't take any profit on that. That was bad. So I think, leave some room for speculation in your account, but make that like a really small percent. 99% money, I think, should be going directly into the stock market. Because that way you don't have to pick stocks. You don't have to look at it every day. You can let it ride, trusting that every 5, 10 years it'll be back up to new highs, right? I think that's the best thing to do for most people. I don't think most people should be trying to pick stocks because, even if you end up picking the big ones like Microsoft, Apple, Google, you're still roughly going to get the exact same return just buying one thing. So less commissions, less fees, less money, your transactions you're doing in your brokerage account. So it's better for most people. Now, if you're somebody like me who does this for a living, who does this actively every single day, yeah, then I can afford to not do that and try to maximize my returns by getting in and out a lot of stuff. But then that's a job. Like that's something I do every day. So majority of the people, it's just best to buy the stock market and forget about it.
Yeah, it does seem like the safer bet, because it's, I just bought a Lucid. And I'm like going, man, should I do it? Should I do it? Because these are these new EV stocks, but it goes down $2, goes up a little bit. Now it's down to it's. I don't know why they're riding, and So what are you seeing with some of these new EV stuff? Whether it's the Rivian, the Lucids, Tesla's something else. I mean, they're, man. If I
Yeah.
had to believed my gut 15 years ago, but that's one of those things. Do I take
Yeah.
that chance or not? What are you seeing in some of these up and coming trends, like the EV market? Are they going to survive? Is the world going to um, embrace them, or is it going to be like anything else? There's going to be 2,000 people that try and only 5 that make it. In your opinion?
Yeah. Yeah, I mean, I think in the EV, when it comes to EV, just buy Tesla. Like there's no point trying to pick a second or a third because the difference is way too much, right? I mean, I think Tesla last quarter delivered, I don't even remember the number, but it was a huge number,
Mm-hmm.
right? It was 600, 700,000, whatever cars in a quarter that they delivered. And the second best was Rivian, which was, I think, 40,000. So
Mm-hmm.
the margin between the first and second place is way too big, right? It's too
Yeah.
huge. Tesla's got a way too much of an advantage, too much of a lead. It's hard to catch up. And that's why you're seeing even companies like Lucid and Rivian and other companies now adapting Tesla's charging ports, right?
Right.
So all EV cars in the future will have Tesla charging port just because you can't compete. If you buy another EV, there's Tesla superchargers everywhere, but maybe not for their own car. So I think the competition is way too much in the EV space. Tesla, because they're so ahead, they have the pricing power. They're already starting to cut prices and lower prices, and the other guys can't keep up. I think Lucid, last I checked, lost $200,000 for every car that they're selling,
That's right.
right? A huge number. So by that measure, they're not going to last very long.
Hmm.
I think Rivian is the only one that's probably going to end up lasting.
Hmm.
And obviously in China we got BYD, we got Xpeng, But again, those are Chinese cars that are going to have a hard time making inroads outside of Asia, right?
Yep.
I mean, Toyota was the only, I guess, Japanese cars that ended up making it. But China, it comes with a connotation of not having a quality. So the rest of the world might not embrace it as much as they have embraced Tesla because Tesla talks or exudes quality, and it's Elon. It's a personality brand as well. Just like, and there's nothing wrong with that. Every good brand is just like a personality brand. Apple was a personality brand, Steve Jobs, right? Microsoft with Bill Gates, Steve Ballmer was a personality brand. So Tesla is Elon is the personality brand. And I think Tesla is more than just a car company. It's a solar company. It's a battery company. And think about this. Think about how British Petroleum, ExxonMobil, they control all these gas stations. But in future, everything's going to be electric cars. Tesla is going to, the gas stations will no longer be there. It'll be replaced by superchargers that Tesla owns the whole system. So they're going to monopolize pretty much everybody charging their cars, no matter which EV you buy. You're going to charge it on Tesla supercharger. They're going to take a cut out of that. So I think there's a lot happening in the background. I still don't think it's too late. I still think it's not late investing in Tesla. If you think about it, is it late compared to 5, 10 years ago? Yes. But is it late when we look back at it 20 years from now when it crosses $1 trillion market cap? Then we're going to kind of wish that we had gotten in today.
Yeah, that's true. Now, how about cryptocurrencies have taken a hit, and with the whole SBF and all this sort of stuff, but they're starting to kind of come back up. They're kind of brushing that aside. How about investing in that in the market and the different funds? I'm too old, I think, to figure all that stuff out. But how about, and how can cryptocurrencies help or hinder your goals as far as diversification?
Yeah, so I think crypto, I wouldn't classify it as an investment per se. It's still in the speculative bucket. It's still too early. It's still like the early stages of internet. And what people think about today might not be the future tomorrow. Because as we know, technology is moving in such a rapid pace that what's a new technology today might not be new tomorrow. And the disruptive technology might get disrupted by a better technology. So it's hard to really predict. So I still think make your investments, do your research, but it should still be a small percentage of your overall investment portfolio, maybe in the 5, 10%, maybe not more than that. And again, I'm not a believer in Bitcoin. I'm not
Mhm.
a believer in that, although I do have investment in crypto, but I have an investment in alternative crypto. It's called Algorand. So I hold that, and that's the only crypto I've invested in. But that again, that is an investment long shot for me.
Mhm.
I'm gonna hold it, see what happens 5 years from now. Because just like the early stages of internet, what happened was in the dot-com bubble, you remember all the internet stocks were going. Anything that has a dot-com went up, right? And then they all crashed. And then after that came the few winners:
Mhm.
Microsoft's, Google's, Amazon's, Apple, and everything else dumped. So that's what happened with crypto. Is 2020 everything was going up. Anything crypto, blockchain, NFT, gorilla, right? Everything's going up. And then everything crashed. Now, out of this winter will come out a few winners. Now, in my opinion, Bitcoin is the AOL of the internet. It was first. It was a great technology. It was a great idea. Everything was great, but it was first. But then better technology comes in, faster technology comes in, like Facebook, Meta, and then rest of them don't exist anymore. Like even Google tried social media in the back of the day, Orkut, all
Mhm.
these things. None of that exists. Then comes the better technology. So same thing will happen with crypto. I think Bitcoin's the AOL of it. It was first, great idea, but now there's better, faster technology like Algorand that's eventually gonna the things are gonna run on it because financial systems of the world will be powered on blockchain going forward. That's indisputable. That will happen, right? No, only question is which one is it going to be. Like that's pick your horse kind of a thing. Now, based on the research I've done, based on people I've spoken to at Wharton Business School, University of Pennsylvania, different professors actually involved with cryptography, even Sylvia McKelly, who was quoted in the Bitcoin's white paper by Satoshi, also talked about him. So he started Algorand. So I'm kind of investing in that vision and the scalability of it. And
Mhm.
it's already happening. There's a company, TravelX. So airline tickets are made on Algorand's NFTs. So right now, if you buy an airline ticket, you can't travel. Guess what? You lost your money unless you cancel with your flight. With NFT tickets, what you can do is you could sell your ticket to me, and the name will transfer it instantly, right? It's because it's NFT. The ticket is NFT, and I could go ahead and sell my ticket that I bought from you to somebody else, and they could still travel in that. And so that's already happening right now, right? And then there's another business, Lofty AI and Slice Space, that is tokenizing real estate, right? So if I have a property but I need money or whatever, I could list it on that site, and that property, if it's let's say $1 million, could be split into 1 million tokens of $1 each. So everybody could be invested in that property, and then you don't have to wait till the end of the month to get the rent payment on it. Rent will be distributed in real time every single day on blockchain technology. So that's already happening on Algorand. So I think that's where I see the future. And if you listen to BlackRock CEO Larry Fink, what he just said last week is he also thinks the future is going to be tokenizing every little thing. Everything's going to be tokenized. You buy a Rolex watch, it's going to come with an NFT that can authenticate that that watch is legit, right? So all of that's going to happen. And I think Bitcoin is too slow. It's too expensive for any of those things to be ever built on it. So it's going to be those newer technologies like Algorand.
Yeah, that's very interesting. Way above my head, but last time I went to a real estate conference, I started seeing the crypto and the NFTs and all those sort of things, and there was a big line at those booths, and it was just amazing. Now let's talk about your company, Live Traders. Give us a little rundown, the website, and what it is exactly that your team does.
Yeah, so started Live Traders in 2015 as a way to guide other people looking to get into the stock market, because there's a lot of information out there online. There's a lot of, I would say, misinformation online, a lot of hype online created by people who are really good at marketing and making videos, right? Learn how to do this, make $1 million, get rich, all this stuff. But I'm like, that's not how real markets are, right? It's work. It's just like anything else. You got to develop your skill. It's not like a get rich quick thing. So that's why we started it, is to give people the reality of it. And that's why the name comes in, Live Traders, because we actually trade live in front of everybody every single day. So win or lose, people get to see it in real time. If I'm losing money, they'll see it. If I'm making money, they'll see it. So then they can see how I handle myself when I make money, but more importantly, how I handle myself when I'm losing. That's really important. So I think that's why we named it Live Traders, because not everybody else online is willing to put their name on the line and trade live in front of everybody. And for me, every single day I've traded for the last 8 years has been live streamed. So I think and there's recordings of every day that I've traded. So I think that's the difference maker. I started this with my business partner Jared Wesley, who's actually the guy who taught me how to trade when I was young. So he was a part of a different firm that I joined in. So he taught me how to trade. And then 2015, we teamed up when that company got bought out to start this. So I told him, you taught me, I became great. Why don't we just take that same method you used to teach me and teach other people? I think that's kind of how the vision for that started.
So, it's livetraders.com, correct?
Yes,
Live trade.
livetraders.com.
And, it's a very interesting concept where, most of the time it's the big fancy ads and the big fancy, do this and for you to actually, so, are there videos, or are they just live streaming, watching you trade? Is that how it works?
Yeah, so we got a few different things. So we got obviously we got courses that are, video lessons on demand, watch it anytime. Comes with the manuals. So those are all courses when you really want to learn the nitty gritty of how we do what we do and why we do it. And then the live trading room is our membership that people join in. And then they can watch me trade live every single day. So the way it works is I'll come on, let's say at 9 a.m. and I'll trade live in front of everybody till, let's say, 10:45. And then 10:45, I'll get off. My business partner, Jared, will come on from 10:45 till 12. And then maybe at 12 o'clock, a different coach of ours would come on. Maybe a student of ours that we've elevated to a coach status might come on and share his experience. And we're just doing it live, trading it. And while we're trading, we're talking them through why I'm trading this, why am I getting into the stock, where am I looking to exit, what's my exit points. So we're kind of guiding them through the process so they can take what they've learned in the course, but now see it in real time. Because it's very easy to show slides of charts. Hey, just do this. But it's very different when the markets are open. So that's why we try to take the book learning now and show them in the actual live application of that in the live chat room. And then we have newsletters too, for people who don't want to trade actively every single day, Maybe they just want to buy a stock and hold it for like a week. Then we got that newsletter too, where I call that swing trading, where I'll be in a stock and I'll maybe be in it for a week, maybe 2 weeks. And so I'm not getting in and out every single day. And that's much easier for people who have a job or something to just follow along rather than looking for those every single day trades.
What's the biggest thing, if I click and watch one of those videos, what's the biggest thing that you want me to get out of watching you live trade, or looking at your videos or newsletters? What's the one thing that you say, Mike, if you get anything, if you learn anything, it's what?
It's robotic indifference, like being unemotional about your trading.
Mhm.
Right. So it's simple as just like, you mentioned a lot of your listeners are computer programmers or into that stuff. So, if you remember, if you're a coder, then there's like if this, then that, right? That's what we do in trading. If this happens, then we do this. If this happens, then we do that. So, and then just robotically following that rather than I think this is going to be this. Ooh, you know what? The stock is going down, but let me hold on. Maybe it'll come back up. Maybe let me buy more, average my down. No, none of that. Robotic indifference. Follow the system as it's laid out, and you'll get the result as it's intended to be done. Because we back tested this thing for hundreds of years. That's what statistically it shows. This is your edge. Just like a casino has an edge, right? We have an edge in trading, and we just got to consistently stick to that edge.
Mhm.
Just like a casino is not going to complain if you go and win $1 million today. They're not going to complain and be like, oh my God, he just won $1 million. They'll be like, you know what? Keep playing, keep playing. Because they know in the long enough time frame, they have this edge that they'll get the money back. And that's what we're trying to do in trading. We try to be the casino.
Yeah, it's very good. Now let's move a little bit over to your book that you have. It's called Prepping for Success. Tell us a little bit about the book and where we can find it.
Yeah, so the book is available on Amazon, Barnes and Nobles, Walmart, or the audiobook just came out as well. So it's on iTunes, Audible, and things of that nature. So the book has nothing to do with trading or investing. It's literally just a personal development based book. Things that I've learned along my way, because what I've learned is trading was the biggest personal development journey I've ever embarked on, because it brings the best out in you, but it could also bring the worst out in you. If you're emotional or if you think emotionally, you get jittery, and then you kind of learn where's all these things coming from, and that kind of got me on a different path of discovering myself. And so that's kind of how I wrote this book. Is I hired a lot of coaches, a lot of mentors, and along my journey, I went to a lot of spiritual retreats, and I did a
Mhm.
lot of workshops and seminars. Really try to work on myself, and so I learned a lot of different things. So originally, I wrote this as notes to myself on, okay, here's the things that I need to do based on everything I've learned. Here's what I need to do to get the success in my life, and I executed on it, and I got the success that I wanted in my life. So that's when I decided that, you know what, I'm going to take these notes that I wrote for myself and then somehow convert it into a book format so that other people can benefit from it and learn from that, because I know that not everybody's going to have hundreds of thousands of dollars to spend like I did on my personal development, right? And go through thousands of hours and, emotional processes and journeys to really discover myself. So I know not everybody has the time and energy. So if I can distill it down, it's in a short read, perfect. So that's kind of what I try to do with the book.
And a little bit feeding off of that, one of the things that's in your topics that really caught me is creating the perfect day, and setting your stage for daily success. And there's three questions to ask yourself when defining your values, and I think that kind of feeds on it. Talk to us a little bit about that.
Yeah, so I try not to overcomplicate things when it comes to life. Where there's a lot of journals online you could buy where you do this, do that. I mean, like that's just extra work, you know. So for me, it's just like I write down. In the evening, the night before, I'll write down. Okay, tomorrow, these are the 6 things I need to do. If I just do these 6 things, I'll consider it as a great day, as a win, right? And then I'll write those 6 things down. And my only goal when I wake up is to get those 6 things done. That's it. Nothing else matters at that point, and because I just write down, and you don't want to write down small things like do the dishes. It's not going to move the needle in your life. So, what are 6 actions you can take right now that'll move the needle closer to that goal, right? And then I write those things down. And then when it comes to values, like just notice what do you value in your life, right? What do you value in your life? And the value is demonstrated by what you're doing, your actions, right? I mean, I could, like, for example, one of the things that I noticed about myself was like I kept talking so many years about health and all of that. But then I kind of look at it myself and I'm like, but I'm not really living the right way. But I'm not really living healthily anyway, And because over the years, you chase the business dream, your money dream, the habits that you probably had when I used to work out every day, eat healthy, they kind of dropped.
Yeah.
Right? I wasn't really working out. I wasn't eating healthy. So I noticed that. And I was like, why is that? Because I realized I was valuing my business and money success a lot more than a health. So that's when you realize, okay, I want to value health. So then you create that, okay, health is my top value, right? And then you start acting on it. So my top 6 things will have workout, right? It will have a lot of those things in it because that will get me closer to my goal. It'll move the needle. So that's just one example of how you structure your day. And then you schedule those things, you schedule those activities. Those 6 activities should have a corresponding time block on your calendar. If they don't, you're not going to do it.
Yeah, that's really good advice. And I think we get so wrapped up in the day to day and working and making money and it's spending time on yourself, on your family, charities, all these different things that will enrich your life, but has nothing to do with money. And I think that's really, really good. Before we leave, is there anything else that I have not spoken about that you'd love to tell our readers before we leave?
No, I think I would just tell your listeners and to, sort of take some time to yourself, maybe this weekend or whenever you're listening to this, and start to think about what does my life demonstrate is my value right now, right? And what am I
Yeah.
really valuing? And then ask yourself, what do I actually want to value? What are the values I actually want to cultivate, right?
Mhm.
And then making sure you write those things down as your top 6 activities so that next day you're starting to move closer to that. And then notice where you're falling or lacking behind your word. So your integrity is do what you said you're going to do and then do it when you said you're going to do it. That's integrity. So if you said you're going to do something and you didn't, that's a lack of integrity. So just notice where is that coming from? Acknowledge that there's a lack of integrity here, and then try to live up to your word. Because if you don't believe in yourself, you don't believe in your own word, how do you expect your clients? How do you expect others to believe in you?
Mhm.
And that's something to ponder.
Yeah, that's really good. And ladies and gentlemen, again, it's Anmol Singh, livetraders.com and also preppingforsuccess.com. Are you on LinkedIn or anywhere else?
Yes, so I'm on all platforms: LinkedIn, Twitter, Instagram. My username on Twitter and Instagram is Delta90, DELTA9ETY. Don't ask me why. I had it a long time ago. Just kept it the same. But that's kind of the username. I'm most active on Instagram and Twitter. That's where you could find me.
Fantastic. Anmol, thank you so much for coming on the Richer Geek, and we hope you have a wonderful day.
Thanks for having me. It was great chatting with you.